An absolute disappointment coming in from an Infosys, and that's what the numbers as well as the commentary is indicating. Welcome to BQ Pram. I'm Hiral Daria. Joining us on the show to discuss more about this is Mahantesh Sabarad. Mahantesh, good evening and welcome to the show. Mahantesh,
Thanks for having me.
absolute, always a pleasure to have you. Mahantesh, an absolute disappointment coming in from an Infosys. Similarly, it seems with TCS as well. It seems that the street is absolutely going to be unimpressed. What's your first take?
Yeah, I think the street is going to be unimpressed, and the Infosys results are quite a shocker. TCS was, although a bit disappointing, still pointed to the fact that there is resilience existing despite the overall slowdown that was being anticipated. Now, the peculiar thing that you have here is you have on one hand good deal wins. The deal win flow for both Infosys and TCS has been good, but their execution in terms of actual delivery in revenue terms has been pretty disappointing. I really don't know what has really happened. Infosys is has been relative to TCS a bit more open about saying things like there are client ramp downs and there are certain clients who have not given right. There is a temporary shutdown of certain clients. Right? I don't know the words they have used, but it's akin to a shutdown of certain clients. So it's a bit surprising. Again, I'm saying you have deal wins coming in, but you don't have revenues flowing. So there is something wrong with the execution.
Right. So, in fact, if you see in terms of the revenue decline as well in constant currency terms, it's worse than what they saw in the COVID hit quarters as well. In fact, they've not seen such a decline in at least the last decade. What would this mean overall? Secondly, bigger shot is coming in on the guidance front because we've not only missed their own projections for financial year 23, however, for 24, it seems it's missing expectations.
Yeah, so continuing to what I was saying in terms of execution being poor, the guidance of 4 to 7% that they have talked of further disappoints in terms of what's really the core order book. It reminds me, and this is unrelated to the IT sector, but then in capital goods, we used to have big order books being reported by the companies, but the executions never happened because they were failed projects or they were delayed projects. Something similar is the bug that has hit the IT companies, and it's pretty hard to explain.
Mm, right. And do you think that the pain is coming in from the BFSI space, which was something that the companies had not warned everyone about and they should have warned us?
Yeah, I think the what you're talking about is the company of the kind of Infosys who always believes in good corporate governance should have pre-warned investors. Actually, they post the results. You have Salil talking about that they saw the ramp downs happening in as early as February, right? And it's only in March that he believes that there is some stability that has come in. But if it was February that they were clearly seeing a slippage, they should have really warned the investors about it much earlier. So
Okay.
that's pretty poor corporate governance, I would say.
Okay. And how much do you think is the pain coming in from the BFSI side? Because clearly, the managements have come out and said that it's the banking crisis which have impacted business as well. How much more pain do you think we should be anticipating from here on?
So actually, you're right, but then the pain in the BFSI sector was in a way visible when you looked at the business segment-wise revenues. It had slipped below 30% in December itself. And between December to March, the slippage is not really much. So the BFSI sector slippage was in a way known, but what has really hurt them in terms of overall, delivery is also something a bit on the communication side, a bit on a utilities side, and so on and so forth. So it's not just the BFSI crisis alone. It is affected the other business segments as well. And I believe the story doesn't end merely at client ramp downs. There seems to be some execution kind of problem.
Hmm, hmm. Right, because clearly, Salil Parekh came out and said that yes, there were unplanned ramp downs that were seen in, companies' clients, and there were delays in decision making as well. However, the sectors where they've seen unplanned ramp down was like telecom, high tech, retail segments, and within the financial segments, they've clearly indicated it was asset management as well as the investment banking business. Now, taking this into consideration, if this is the situation, Mahantesh, with regards to the larger players, what can we expect with mid cap and the small cap IT names from here on?
That's a very important question because many of the small cap, mid cap companies are dependent on typically one-off kind of revenues or revenue streams in a particular span of period.
Hmm,
And so they don't have consistency in terms of clientele, consistency in terms of the services that they deliver, and consistency in terms of how the business segments they are serving as. So what really happens is for mid-cap companies, those who are really affected will be those companies which will have such revenue streams which are kind of one time, one off. I'm not saying one off in a quarter or one off in a year. It could be one off for a period of even 2 years, but you will see such ramp down rounds happening in the IT space as well, which is the mid cap and the small cap IT space. So I'll be a little worried. um, I really am shocked by how the Infosys results uh, have been released.
right.
Again, I'm repeating, deal wins was something which is always a precursor to what the delivery could be ahead. But I believe somewhere the attritions could have been the root cause as well.
Hmm, hmm. So with all of this said and done, let's look at the valuation multiples, right? Now, clearly, Infosys is almost at around 21 times, underperformed by around 8 to 9% on a YTD basis. A TCS, again, a 23, 24 times is the valuation that we are assigning it. A degrowth of around 2% on a YTD basis. Now, with this combination, if you see that a growth of 4 to 7%, if that's the growth, let's benchmark it, for the IT sector as a whole, basis the guidance Infosys has given us, margins are not going to expand as expected. What should the valuation multiple one should ascribe to these companies according to you?
I think the growth premium that they always had, the IT companies had, will kind of disappear. There was also alongside the growth premium, there was also this visibility premium in terms of their deal wins and overall technology adaptation that was happening all around. Those premiums will start disappearing. So you could see valuations compressed by 3, 4 multiples actually. I
Hmm,
wouldn't want to hazard a guess further because now people will be very cautious about what needs to be done with an Infosys, and then I'm sure there are enough long-term investors within Infosys fold who would like to relook at their investments. They normally are not bothered about 2 percentage points, 3 percentage points, growth slippages here and there. This is something which is seems to be something very core to their growth. The
hmm.
growth slippages seems to be something damaging the core.
Right. So Mandesh, my last question on this is, going ahead, what should be the key monitorable according to you? Because as you mentioned, the order book is there, right? It's the execution which is a concern. Then, from an execution perspective, again, do you think it's hiring also which becomes a key monitorable? Because still we don't see these IT companies hiring. That's that's something which will actually raise an alarm.
Yeah, I think the hiring is the first metric to look at, but I'm also increasingly gonna look at certain things like will they announce certain cleanup in their order book? Because
Hmm,
a ramp down, an unplanned ramp down doesn't necessarily end there. It could also be a project withdrawal
hmm,
for certain clients. If that is the case, then your deal win order book is something that doesn't hold water anymore, or some portions of those deals will not hold water. So I suspect that many of the IT companies will relook at their order wins and report slippages or report a contraction in their order wins. So these are two pointers that I would start looking at for the IT companies ahead.
But and Mandesh, when have we seen similar kind of a scenario happen when the IT companies had actually come out in bulk to come out and clean up their order book?
I don't recall of any such instance in the past for IT companies announcing. Perhaps Wipro did, if I'm right. I am not too sure,
Hmm.
but definitely not an Infosys. Infosys had problems related to, I would say, some of the acquisitions in the past. So the IT companies have gone through such pain as certain acquisitions not really working out the way they had anticipated, and then they taking a bit of a write off there, okay, or a write down there, if not a write off. But we haven't seen contracts being purged out. I don't recall of any such instance, or at least the companies not are don't really come out and tell us what is the real purge in their order book.
Right. And my last question is, how are you expecting the stock to open? And do you see stability there? Because, in fact, when we were just earlier discussing as well, now that the buyback is completed, they've done a buyback at 15.39. That was the average price versus a maximum buyback price of 18.50. Even the buyback is not really going to come to the rescue to support the share price, right?
Yeah, you're right. So the buyback support isn't there. The dividend support that seems to be apparently there will kind of disappear with the low growth guidance that has been provided. And you also have now question marks over even margins.
Mm.
So it will be quite terrible in terms of the stock's performance. But the only silver lining that I can see is that the stock's performance over the past year has been a big laggard, right? Most of the IT companies have underperformed over the overall market. But then again, you have to view it from the perspective that they had a superb run the year ago period. So that's the only silver lining. That is the recent past underperformance is the only silver lining or the backstop that will really hold the share prices up as in not deteriorate too much.
Right. So probably the markets were pricing in some bit of a risk, at least in terms of the price performance that we saw. So it's going to be an interesting day of trade in terms of Monday morning as to how this entire combination weighs down in terms of the markets overall. Thank you, Mantesh, so much for joining us on the show and giving us that candid view in terms of what should be expected as well. Thank you. Stay safe and speak to you soon again.
Thank you, Viral.